started. Welcome everybody. It is Thursday, February 19th, 2026. We are here for Season 3, Episode 2 of Stride Live, joining with Morgan Holmes, resident CPA, for a tax season kickoff Stride Live edition today. One of everybody's favorite topics. So Morgan, how you doing today?
I'm doing great.
Not too buried down in tax season just yet, right?
Not yet. Still pretty early. So we're...
I know, still waiting on documents. I know we were talking, and this is the time of year. Don't wait. Have your stuff ready. Get it to your CPA so they can file and get things ready. But without further ado, we're going to jump right into it. Tax season's here. Most clients and most businesses have closed their books, hopefully, for 2025. They're getting ready. 1099 should have been filed by the end of January. But number one thing is, what can we do to prepare for upcoming tax season? Morgan, where do we start there? Where's the first place to start for getting ready for tax season?
I think the first place to start is just to start getting organized, right? So by now, people have started receiving W-2s and 1099s and all of that fun stuff. Some people just kind of keep them scattered all over the place, but those that are more organized get their tax returns done quicker.
So this time of year, what are you seeing that clients are doing well in relation to getting prepared and kicked off for tax season? What are the things that you're like, we appreciate when you're getting this done?
Yeah, I think obviously being organized, right, and sending documents in all at one time, being paperless. So nowadays with scanners and all of that stuff, none of us really want to get paper documents. Our process is once we are engaged to prepare a tax return, we send out an organizer. So that one helps you guys get organized, and two helps us understand what happened during the year. Sending files in the correct format is ideal. We don't use HEIC. People take pictures of stuff and we get HEIC files. That is incredibly challenging for us to deal with. Use your CPA's portal. We all use different portals to collect and gather information and send information to our clients. And occasionally we'll get clients that don't use the portals, and that makes it definitely challenging. And then obviously submitting stuff early. So if you have all your documents, get them in, because chances are your CPA is not incredibly busy right now. We're starting to get busy, but we're not slammed. So it's a great time to send stuff in.
Absolutely. And what are some of the things they should be looking for? What are some of the tax documents outside of, obviously your bank statements, but from a business perspective, what are some of those documents that maybe you're not thinking of this time of year that, you find yourself always having to re-ask your clients for?
Yeah. Contributions to retirement accounts. Those documents don't actually come out till May. So the 5498 that shows your contribution doesn't get submitted to or from your brokerage account until May. So if you have a bank statement or a brokerage statement showing your IRA contributions or your Roth IRA contributions, that's good to send in. Documents around income statement items for Schedule Cs and rental properties, pulling together rental income and expenses for rentals, and business income and expenses for your business income if you're not filing a business tax return. Just lots of different stuff.
When you're organizing these things, I know, sometimes it's easier to make a system like going by income, like you mentioned, those investments, retirement. What are some of the other things? Obviously, business expenses, any deductions that you're aware of? What are all the things, anything else? How important are receipts? Obviously, that's a big one. I think some people keep them all, some people don't keep any. How important are those type of documents for tax preparation?
Yeah, from our side, we don't really care about receipts. Or I don't. If you put them on an income statement, as long as you're able to support the amount that you can put on the income statement, Excel spreadsheet, QuickBooks, whatever it is that you're using to create your income statement for your business or rental property. We don't go and gather a bunch of receipts from our clients because we're not going to sit there and add them up. But if something seems unusual, we'll certainly ask, about it.
When you talked about that tax organizer, sometimes people are sending those, and like you said, I know we use TaxDome on our side, but what are some of the things that they need to have, or some of the documents they can just have prepared that might not be on there? Like, for instance, obviously you need your Social Security, but what are some of the other things that you might not be thinking for business owners on a personal side that they might not be thinking about to have ready?
On the business, so for a business owner, again, retirement contributions. Retirement contributions don't actually need to be made until April, or if you have a SEP or 401k, you have until September to make those contributions. So, in order for you to take the deduction, we need to know how much you're actually going to contribute to your retirement account. If you have like a cash balance plan or defined benefit plan, same thing. How much are you going to actually go and contribute to it? So you might have to engage your third-party administrator to compute those amounts for you. So probably a good idea to get a jump on that early in the year. Most everything else will probably be in the income statement.
I know I shouldn't say most, but many clients we deal with are S Corps. Can you just give them a rough timeline, a calendar, January, February, what they should be looking for, February, early March, and then, given the March 15th date, what should they be really looking for in terms of timeline for, this time until that March 15 update?
Yeah, so depending upon your bookkeeper, once we get those books closed, we start preparing tax returns. We're sticking to a timeline this year of, if we haven't received your information by February 15th, more likely than not, we'll probably extend you. Most of our clients are on QuickBooks, and so we're able to pull the information out of QuickBooks and get started. But we do have clients that don't use QuickBooks. You might use something else. So once we get the data, so like, for example, if you sent stuff in on March 15th, we probably can turn around an S Corp tax return in 7 to 10 days. Again, we work on the first in, first out method. So if you send it on the 15th, you are definitely going to be at the end of the pack. So, we try and get that stuff done within 7 to 10 days so that we can feed that K1 into the person's individual tax return. On the individual side, we have a March 15th deadline. So if you haven't submitted your tax documents by March 15th, more likely than not, we'll file an extension. So we're trying to make it efficient for everybody and not deal with the client that drops it on the 14th of April and wants it done on the 15th. We're just not going to do that.
What are some of the downsides to having to file an extension or to not getting things done in a timely manner?
Yeah, so I think the downside to filing an extension, one, there isn't really a downside to filing an extension, but many people don't realize that the extension doesn't extend the time that you actually need to make your payment. You need to make all of your tax payments by the April 15th deadline. So the extension really is just the extension of time to prepare the return. If you don't submit all of your documents, this is where the downside comes in. We can't tell you if you've paid all of your taxes. And so if we don't have the information, we'll file an extension based on the information we do have. And if you don't or haven't yet paid in all of your taxes, you potentially could be subject to penalties and interest on the underpaid tax.
Can you explain a little further? Because I think there's misconceptions, because I know many people think when you file an extension, that means that you're not filing the return or that you aren't necessarily have to pay. Can you just give a little more detail around what's that process look like of filing? Because I think there is that common misconception of what it really means to file an extension.
Yeah. So the extension is just an extension of time to file the tax return, right? So for our S Corp and partnership clients where the returns are due on March 15th, we typically will go ahead and file an extension anyway. because that extension actually gives you an additional 6 months to make those contributions to SEP IRAs or 401k contributions, etc. So we actually last week filed all of our extensions for all of our S Corp clients. But filing an extension is not a bad thing. It's just, it's kind of a safety net, right?
Are there any additional fees, interest penalties that you get for filing an extension? What does that look like for a business owner?
Yeah, not if you haven't paid all your tax. So if you have all of your tax paid in, the extension just pushes out the time that we have and to prepare that tax return, or for our clients to make the contribution to like a cash balance plan, SEP IRA, et cetera. So, I mean, really, I sort of think about filing an extension for someone who's going to make a retirement plan contribution as sort of a cash flow play, right? Like, hey, you can make the payment on March 15th, or we can just file an extension and you can make the contribution all the way out until September 15th. So it gives you a little more time to collect some cash and make the contributions.
No, I think those retirement contributions it's such an awesome opportunity. Like for instance, it's one of the main deduction opportunities where you still have some flexibility, but what are things that business owners can do to maximize their deductions this season, like as a part of the preparation process to make sure that they're reducing their taxable liability and reducing that burden of handing that check over to the IRS?
For 25, tax year 25?
Yeah, for 25, or
There's not
if any,
one.
what can they do right now just to make sure
Yeah.
they're maximizing what they're already eligible from for last year? But if anything, what else can they do to potentially increase that deduction?
Yeah, so I mean, really, there isn't a whole lot you can do after the turn of the year, right? So once December 31st comes and goes, tax planning for the prior year is very, very minimal. I mean, retirement contributions, making decisions around depreciation. So with the One Big Beautiful Bill Act, we now have 100% bonus depreciation. The Section 179 limits have increased. So there's some opportunities around, playing around with do I take more depreciation, less depreciation, etc. I mean, obviously, the lower you make your taxable income, the lower your qualified business income deduction goes, right? So it's really kind of that stuff, right? But there's not a whole lot you can do in the new year for last year.
Getting prepared, yeah. Unfortunately, once that turn of the calendar year, it's pretty much that's about it outside retirement. But what I would say is, what are the questions that the average business owner should have for their CPA? Let's say they have their tax information, they've been prepared, they sent everything over, submitted in a timely manner. What are some of the questions they should be asking? Maybe more forward-looking, given that hey, I'm already done, I'm going to pay my taxes, I know what's going this year. What are some of the questions they should be asking for 2026 right now?
Yeah, so setting up retirement plans if they don't already have them for this year, maximizing contributions. We get a lot of questions around fixed asset acquisitions and depreciation, again, with bonus depreciation being 100%. Yeah, I mean, we get a lot of different questions, so it just depends. I mean, we have state tax questions. I have a new employee in some other state. What do I need to do with that? More likely than not, you're going to be filing tax returns in multiple jurisdictions at that point. So yeah, we get lots of different questions, but
So, well, Morgan, 1 minute quick summary for tax season. Hey, you didn't really want to pay attention to the live. Somebody, what should they be doing? That 1 minute snapshot, getting ready for tax season, make your CPA's life as easy as possible.
yeah, I mean, I would say back to the handful of bullet points at the very beginning. So one, get organized, right? So keep all of your tax documents digitally in a folder on your computer. Use your CPA's portal and upload those. Make sure that you're not using. I mean, our preference is always to receive a PDF, right? Every software platform will accept a PDF. Don't send HEIC files. That's just going to cost you a lot more money because we have to then convert those HEICs to PDFs to actually use them and get your stuff in early.
It makes our lives much easier. So
Yeah, for
Morgan,
sure.
thanks for taking the time today. I know it's busy. It's tax season. Appreciate it as always for joining Stride Live. And this episode will be available. You can get on Stride Live. You can go to our YouTube channel on our LinkedIn page. It'll be available about a week after the show. All right. Thank you.
Thanks, Casey.